6th after the action of, or on October the 5th, and see what happened on that date. As you can see, if we had a position, a preferred position that we would like to have, it would have been probably to the short side based upon the other indicators that we had. But you can see where we opened. We opened on October the 5th, right in the middle of that range. It's a situation that we favor, but we never got the reaction back down to that predicted low that we would like to have seen if we were going to be a buyer. Instead, we did get up to this in the vicinity of the predicted high. That predicted high was at 1132, so that means that we would be a seller on the limit order at 1128. As I said earlier, we don't want to risk a whole lot, so this market, in this case, at 1128, it kept going up. And so if you say that I'm risking, let's say arbitrarily 8 points, because that's $400, that's about the outside of the amount of risk that I'd like to take in the E-mini, $400 from the entry point, and well, it didn't take long to get there because the market reached as high as 1141. So you got stopped out, and a bummer. You had a loser that particular day based upon that trading action. Well, now let's step ahead, see what that action told us about what will happen today, on today, October the 6th. We know now, after we have these, this action in here from this candle here, we have this candle in the books now, and we now have the neural index has moved to 1. We have the predicted differences have moved up. They're looking on the bullish side. We're starting to get a little turn here in the predicted exponential moving average to the upside. So we could be in a position where we would, favor the bull side, favor getting a long position. This is the predicted range that we have for today. We have the predicted high at 1144. So if we look at the predicted high at 1144, we know what that means. We're going to be a seller at 1140, and 1140 is right in this vicinity. Let's see if I can draw it in here, just kind of give you an idea. Right in this vicinity right here, 1140. That's going to be our limit order to sell. If the market were to drop back down, we have a predicted low at 1114. Add 4 points onto that to fade the low, and we will be buying at 1118, right about in this vicinity right in here. Now, did the market get there? Well, I don't know for sure. We have a 30-point predicted range, overall, and we'd like to take a little piece out of the middle. The market did open today, 1135, in the middle of this range, right in this vicinity right here. So we have, one step, one thing on the way to the way we want to trade accomplished. We have opened in the middle of the range. The low that I saw was 1129. So 1129 is, somewhat removed from that predicted low that we talked about. Somewhere right in here was that low at 1129. So it never got to this predicted low, never gave us a chance to be a buyer if we wanted to be a buyer, because we sensed that the trend was more to the upside, the reference. But so we wouldn't have gotten in. The predicted low was not a factor today. The last high that I saw, and this was a little while ago, but was 1156, so right in this vicinity, right in here. And so again, just like we had the situation on this candle here, where the market moved up, moved on up through the predicted high, and if you had taken the market, at its word, the strategy at its word, and traded it that way, we would have had another situation where we probably would have had a small loss, the $400 loss. So again, if you were to take advantage of that opportunity to sell, you had an opportunity, I'll put that opportunity in quotes, at about 2:45 a.m., 3 a.m., something like that. And if you said you were going to risk 8 points at the max, well, the market knocked you out right away at 1148. So you had a quick, intraday trade because you were in about 3 a.m., let's say, and out about 6 a.m. because the market kept on going up, and you did not turn back down as you were hoping when it reached that predicted high. It did drop down eventually to that 1129 mark that I said was a low at the start of the regular session, and then it rallied back up to 1156. Now, there's a loss, if you're trading it on inter-day basis. If you trade that, not every day, as I said, would be a winner. I tried not to pick anything that, is going to show you obviously all the pluses and not the potential negatives. But there's another consideration here that we need to look at, and that is if the market starts to have a little change in tone. Now we've had a couple of up days in a row, and we get another up day. Perhaps the market is shifting to a trending mode. And again, I don't want to get married to one particular type of trading. I know that there are track records that can be built on a particular style, but I probably will jump around a little bit more than most traders, be a little nimble. I might use options. There might be some other things, although with options you can't really tell, on breaks of prices because options consider volatility and lots of other factors. So hard to trade them exactly in relationship to the charts. But let's say that you decide that this market appears like it could be moving to the upside. We may be starting an uptrend here. It may be hard to believe, and maybe you'll fight it tooth and nail because you don't think that's what's supposed to happen, but it could be shifting to that trending mode. So our guidelines there that we have used in talking about trend trading and talking about swing trading is that we would use that predicted high, the lowest predicted high, as a potential kind of a key point for determining our entry. We said earlier our average daily range was around 40 points. Now that particular predicted high was at 1115, so we add 40 points onto that. That means we would be a buyer. Again, this is our trend trading hat that's speaking right now at 1155. 1155 is right in here. And so if it were to get to 1155, you would be long as a trend trader, keeping a stop then 20 points below that point at 1135 in case the market turns around. Now the trend trader is going to take a little bit more risk. That's going to be 20 points of risk, but that's what it takes to get into that trade. Problem. This looks like a nice long position for a trend trading setup and all that, but two things have, kind of maybe give you a little reservations, and that is, first, we've been stung a couple of times already in the last, few weeks, few months, trying to get into a trend, and we keep getting, buffeted out by various up and down type movements. We don't, we barely get in and we're out. So you might have some reservations about trying to trade this from a trend trading standpoint at this point. Maybe it's too early. Only the third candle to the upside, and sometimes they say that if you see a little bounce, 3 candles is about all you can expect. David Colby mentioned that in his TraderPlanet.com website, his commentary the other day. If you have the belief that the market's going on up, well and good, you can get in the trend. But if you're a little skeptical, you may not want to take that trade, that trend trade, and you may want to say that after 3 candles, that's about what we can expect. The second thing we have that could be a reservation is that we have a U.S. employment report tomorrow on Friday, and maybe it doesn't have the same impact that it had a few months ago, but still it could be a potential surprise. You don't know what it's going to say. With those circumstances, you say that, well, if there's a very sharp move, first of all, I'm probably not going to catch it